One of the most common questions I get from veterans is, how much can I actually borrow with a VA loan? And most people are expecting a simple, single number answer. But the truth is, there is no single number. I've seen two veterans with almost identical situations, and one qualifies for $300,000, while the other one qualifies for over $500,000. So, what's the difference? That's exactly what we're going to be breaking down in today's video. I'm going to walk through the 5 key factors that determine how much you can borrow with your VA loan benefit. And even more importantly, how lenders actually look at your situation behind the scenes. If we haven't met yet, I'm the Loan Caddy. I'm a GWAT veteran, still serving in the Army Reserve, and for the last few years, I've been a mortgage broker specializing in VA loans. And this video is part of my VA Loan Masterclass series, where I'm breaking down how VA loans actually work so you can use your benefits the right way. Before we get into the 5 factors, we need to clear up one of the biggest misconceptions about VA loans. A lot of people think that there's a hard ceiling on how much you can borrow. They've heard the term VA loan limit, and they just assume that that's the max. But here's the reality. The VA actually does not set a hard cap on how much you can borrow. What they do is guarantee a portion of the loan to the lender. Your actual loan amount is going to be determined based on your financial profile. So instead of asking, what's the limit for VA loans, the better question is, what will a lender approve me for? So factor number 1 is actually one of the most important things, and that's your income. This is where everything starts. Lenders need to determine whether you can realistically afford the monthly payment on the mortgage that you're applying for. For military borrowers, income includes things like your base pay, BAH, BAS, and any other incentive pays you get, or things from like side jobs or rental income. And for civilians, it's just your W-2s and your disability benefits or retirement. Now here's something important. It's not just about how much money you make. It's about how stable and consistent that income is. For example, somebody who has a steady W-2 income may qualify more easily than someone with fluctuating income, even if the total amount for both borrowers is similar. Let's say 2 borrowers both making $6,000 a month, but one has stable military income, whereas the other one gets paid based on a commission. The stable income borrower is usually going to have a stronger approval profile because lenders are looking at the risk, not just the income number. Factor number 2 is going to be your debt. This is where a lot of people get tripped up. Lenders look at something called your debt to income ratio, or DTI. This compares your monthly debt payments to your monthly income. So things like car payments, credit cards, student loans or personal loans, or any other sort of debt that comes out of your bank account every month, all of that gets factored in. So let's say you're making $6,000 a month, but you have $500 a month in monthly debt payments. You're in a much stronger position than another borrower who has $2,000 in monthly debt with a similar income. That difference alone can swing your buying power significantly. And factor number 3, your credit profile. Now, the VA does not set a minimum credit score themselves, but lenders do through what we call an overlay. Your credit's going to impact whether you qualify, how flexible the lender can be, and sometimes it'll affect your interest rate depending on the score. But here's the key point. VA loans are generally more forgiving than any other type of loan. So even if your credit's not perfect, that won't automatically disqualify you from leveraging your benefit. Now, factor number 4 is the one that most people never talk about, but it's extremely important when it comes to VA loans, and it's called your residual income. Residual income is basically just how much money you have left over each month after you pay all your major expenses. So after you pay the mortgage you're applying to, any other debts that are outstanding, your taxes, and your other basic obligations, what's left? The VA wants to make sure that you're not stretched too thin and that you actually have money still left over for real world problems. This right here, residual income, is one of the reasons that VA loans perform so well in the long term. Because they don't just look at whether you can technically afford the payment up front, They look at whether you can actually live comfortably after making that payment each month. And now the fifth factor, which is your VA loan entitlement. This is the portion of the loan that the VA guarantees. If you have full entitlement, you can typically buy with no down payment, as long as you qualify based on income, debt, and credit. However, if you have partial entitlement, for example, if you've used your VA loan before and have never restored it, that can impact how much you can qualify for without putting money down. But we'll dive deeper into entitlement in a later video. So, let me give you a real-world example of how all 5 of these factors come together. Let's look at 2 borrowers. Both of them make similar income, but borrower number 1 has lower debt, better credit, and a strong residual income, whereas borrower 2 has higher debts with lower credit and less residual income. Even though their total monthly income is similar, their approval amounts will be drastically different. That's why there's no one universal answer to how much can I borrow. Now, that being said, one of the biggest mistakes I see is veterans focusing only on the maximum amount that they can qualify for. They ask, what's the highest number I can get approved for? But that's not always the right question. A better question is, what monthly payment am I personally comfortable with? Because just because you can borrow a certain amount doesn't mean that you should and doesn't mean that you want to. So, when you're thinking about buying a home using your VA loan benefit, don't just look at the top end number. You need to think about your lifestyle, your savings goals, and what kind of unexpected expenses life's going to throw your way. The VA loan may give you flexibility, but it's still important to make smart financial decisions. So, quick recap. There is no single number that determines how much you can borrow with a VA loan. Instead, it comes down to 5 key factors: your income, your debt, your credit profile, your residual income, and your VA loan entitlement. All 5 of these factors work together to help determine your purchasing power. Now that you understand how lenders determine what I can borrow, the next question is, how can I actually use the VA loan? Because there are several different ways that veterans can take advantage and leverage this benefit, and that's exactly what we're going to be covering in the next video. So, if you're a veteran or a service member trying to figure out what you can afford using your VA loan benefits, feel free to drop a comment below. If you want to learn how to use your VA loan benefit the right way, make sure you subscribe to the channel, and I'll see you on the next hole.